Hey everybody, it's Daniel here from Infravest. Hope you're all doing well. So, we got to talk about consumer price index. This is the inflation numbers for Canada. And what has happened? We had the headline number come in at the two handle at 2.9%. This is the year over year number. And this number basically is lower than what the expectation was. The expectation was to see 3.3%, but the inflation number came in lower. We also see the core component. This is taking out the volatile gasoline prices out of the component. That number came in for the year over year 2.4%, so also lower versus last month, the number was around 2.6%. So, very clear sign here of disinflation continuing to be the theme, right? Not deflation, yet to see that, but disinflation here. Now, I'm going to go over the CPI report with you. I'm going to also show you the trends in the CPI report so we all are clear of what's going on instead of someone else trying to sell you that, hey, inflation's coming lower and that means all is great. You got to start buying all of a sudden and life is just fantastic. Although life might be fantastic, but let's also make sure that we are in line with reality of what's going on, especially behind the actual numbers. So let's get into it. Let's look at the headline number here, the year over year. What's the trend? What have we been seeing here? Right. So, as you could see, obviously, since 2022, we've peaked in Canada, the headline CPI, and CPI has been trending lower. Now, if we look at it from, in 2023 and we look at it now, 2024, we see basically since the summertime of last year till now, we've been basically in a range, right? Very similar to the US when I was talking about the inflation report there. So, kind of range motion there, kind of the stickiness that we are seeing in the inflation report. However, the number did come in at 2.9%, so obviously lower than the previous report, which was 3.4%. And this number is still hasn't reached to the lowest point, which the lowest point was 2.8%, which was printed in 2023. So, but we got close to it. So, okay, we're seeing some softness in the inflation report, but nothing in terms of making a new low, similar to the US CPI numbers. Now, if we look at the core number did make a new low at 2.4%. This takes us all the way to the 2021 numbers there. And it continues to progress lower, and we're seeing the continuation of a nice disinflation trend. So this is again the year over year number, the core number. So overall, we're seeing that yes, price, the growth of the price is slowing down. Okay, so if we go into and look at from the government website, StatsCan website, for the 2024 January 2024 CPI report, it tells us here consumer price index rose 2.9%, which I just mentioned in January, following the 3.4% gain in December. So the largest contributor to the headline deceleration was lower year over year prices for gasoline. No surprise there, right? We're seeing gasoline continue to tumble, continue to show the weakness there, all right? Gasoline, crude oil prices, oil in general, has been having a tough time to rally aggressively there, especially no matter what kind of news we get. Even if it's positive for oil, you still have certain forces pulling it lower, which makes you think about, Is it the demand side that people are very worried about for the oil market, the oil traders out there? Are they very worried about the demand, which is keeping those gasoline prices lower? Right. So year over year prices for gasoline January -4% compared with December's plus 1.4%. Excluding gasoline, the headline CPI slowed to 3.2% year over year in January, down from 3.5% growth December. So again, CPI has risen, inflation has risen, but just at a slower pace, slower growth, slower gain, hence disinflation. Price growth for food and purchase from stores also slowed. It's still up there, but slowed down. So you can kind of get some relief from those increases. But slowed year over year in January, 3.4% compared to December, plus 4.7%, putting downward pressure on all items CPI. Lower prices for airfares and travel tours also contributed to headline deceleration. Okay, so basically the contribution, right? What's contributing to that number? The lower numbers: gasoline, lower food prices. So food slightly becoming lower in terms of its growth of the price increase. So I know sometimes it's a little bit hard to grasp that. Food prices, inflation is still increasing, but at a slower pace, right? And of course, prices of airfares and travels, because who is traveling in January after December? Not many people, especially after doing some spending, especially after facing with, and still facing today, inflation in many places, in many components, in many areas, which we're going to talk about very soon here. Um, on a monthly basis, CPI was unchanged in January, following 0.3% decline in December. On a seasonal adjusted basis, CPI fell 0.1% in January, the first decline since May 2020. Now, gasoline prices decline. We talked about that. You can read this later if you like. Grocery prices increase at a slower pace. So this is very interesting. While grocery prices remain elevated, their growth slowed year over year in January. So growth was about plus 3.4% compared to plus 4.7%. So you see that, right? It's still increasing, but just lower compared to December, right? The deceleration of grocery prices were broad-based, with products such as meat plus 2.8%, other food preparations plus 4.2%, dairy products plus 1.5%, bakery products plus 4%, fresh fruit plus 1.9%, contributing to a slower year-over-year price growth in January. Other food items such as soup, negative 2.1%, all right, less soup, right? People are drinking less soup. Bacon, negative 8.4%. Shrimps and prawns, negative 3.4% year over year. Price declines in January. So certain areas of food, but not everything. And very big components, or the staples, the products that people buy often, like meat, are still up, right? Dairy products up, bakery, right? How many of us buy a lot of bakery products? Also up, fruits as well up, right? So, seeing that the number is still increasing, but not at a comparing it to December, not at a large amount like how it was in December. It still tells you that grocery prices, the inflation there is still elevated. It still doesn't solve much of the problem. So if you are thinking that, oh, inflation report has come down lower, right? Overall, what I'm seeing here, inflation report is declining. But when you really look into it and dive deep into it, it's still not amazing. Does this constitute for the Bank of Canada to come out and start talking about rate cuts all of a sudden? No, right? Let me go back to where I started here, right? Look, we've been sticky here for some time in the headline CPI. Although, yes, the core has been declining, but nothing crazy, nothing so amazing in terms of deep declines. And remember, let's not forget the target is 2%. And And very likely the central bank wants to see that sitting there for some time, because there are external factors out there, whether it's supply chain, whether it's the shipping industry, whatever the case may be, wages or etc., shelter, right? We're going to talk about that very soon. We're going to talk about shelter prices, what that looked like in this report, how that, you know, all of those are somewhat contributing to the stickiness and the inflation still not being that great. So consumers pay less for airfares. So you can see there's a decline there. Obviously, January minus 14%, December minus 9.7%. Canadians pay more for cellular services in January also. So cellular services fell 16.4% January, following a 26.8% decline in December. Prices rose 6.7% in January compared with December, as prices returned to earlier levels. Right. Um, Looking at food, right? If we scroll here, very interesting to see how the supply chain prices have done, right? So remember, going back here, grocery prices increase, but at a slower pace. You see that, the grocery prices are up, food components are still up. But let's look at the supply chain of things, right? Because that should have a factor into the somewhat stickiness, elevated food prices. So we see that crops have declined 5.4%. Um, Not shocking to see why meat is up, livestock and animal products in terms of the production side of the supply chain, up 11.4%. Look at the the machinery, 15.9%. Farm input fertilizer that go into, the crops and whatnot is down 24%. Animal feed down 8.1%. So, in other words, what this is telling me is that, okay, you need less machinery, less fertilizer, less animal feed, basically telling me you are producing less. You are not producing as much as expected, less need of machinery. Machinery fuel. So this, let's leave that out. That we obviously know with the lower gasoline prices, but with the fertilizer and the animal feed, less need of that. Maybe they're producing less, thus why you see the livestock animal products a little bit higher. When you look at the processing and packaging in the food supply chain, you see crop products at lower. You see the animal and animal products higher, 7%. Plastic bags 10% higher. Plastic bottles a little bit lower. Paper board containers higher. So you see the packaging of these things are up there, contributing, yes, to your higher grocery prices. So although they are the less need of the fertilizer, the animal feed, and those prices are going down, that's not translating into maybe it's translating in the sense that it's declining from the previous month, but not much in terms of massive improvements there, right? Because although you still see livestock animal products are still elevated. When we look at the transportation, we know very well here on this channel that transportation, wholesale, and retail has been declining. Truck transportation, negative 2.8%. Motor gasoline, minus 3.7%. Diesel fuel, negative 25.8%. Food wholesale markup, minus 0.8%. But grocery stores markup. The grocery stores that are marking up the prices have gone up 10%. So plastic bags, packaging, even if they tell you that they're not selling you any plastic bags at the grocery stores, but your food products are packaged in plastic bags. Very interesting that that is still allowed, even though they're trying to do this green movement. Um, Look at that, right? The plastic bags, 10.3%, feeding into those higher food costs, and the grocery stores marking up the higher price there, contributing to that increase still in the food prices, right? Going back here, increase still, although yes, at a slower pace, but still an increase. Again, not so amazing to me to see the number drop from 4.7 to 3.4. It's okay, but it's nothing like, wow, we solved the problem here. Time for rate cuts. No, that's not the case at all. Um, let's look at this chart here. This is very interesting. Um, again, this kind of summarizes majority of what I was saying, but what I didn't talk about was shelter, and it should be here. Uh, duh, 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 duh. It is not here. Okay, hold on 1 second. I'll get it. Okay, so we talked about everything else, but not the shelter component. All right, so here you go. Shelter moved up from 6% to 6.2%. Okay, so from December of last month to January of, which was, sorry, December 2023 to January of last month, right, we've seen an increase in the shelter component. So, two most important items. This is funny. Two most important items for a human being is food and shelter, right? One of them, these are one of the many items that are important for a human being, but at least when you look at the Maslow hierarchy of needs, you do need to eat, you do need food, you do need shelter, you do need water, right? So shelter being an important need has gone up, and it's still elevated. It's still in the at the 6% handle. So that is still contributing to the stickiness and higher CPI. That's number one. Number two, yes, a nice decline there in the food, but still elevated. When we look at the other components, you do see weakness in household operation furnishings and equipment, but that's also still, that's, even though it's a decline, it's less of a decline versus the December number. Clothing and footwear, we see a decline there. Transportation, it's we see an increase there, 1.2%, less than the December one. Health and personal care, 3.7%. Recreational education down, and alcoholic beverages, tobacco, and cannabis slightly down, but still at 4.2%. But the main thing I wanted to note was the shelter component, right? That has increased. So shelter component has increased. Food inflation, the stickiness there has increased. The plastics have increased. The prices of plastics, the packaging have increased, even though the transportation is cheaper, and the grocery stores are still marking up their prices higher. Um, that does not tell me there's a need for a rate cut. So overall, when I look at all of this, when I look at the CPI report, okay, great, the two handle back again, but again, we're still in that sticky range zone. Nothing amazing there. Doesn't tell me that all of a sudden this changes things for the Bank of Canada to start cutting rates. However, there's one argument to be made compared to the US. It wouldn't surprise me to see if Canada moves a little bit earlier on rate cuts versus the US. So from that point of view, I can see that happening. The other point of view is also that as we're seeing this decline in the CPI in prices, especially in certain areas, especially with food, it does starting to show that we could see a change in the trend where we go from disinflation to deflation, and right there and then would tell me that Canada might be the first one to tip into recession, and it might be more uglier than the US, right? As prices are rapidly moving lower compared to the US, and Canada's experiencing more of a disinflation than the US. It wouldn't surprise me to see Canada get hit harder with the recession. The only question is what does Bank of Canada do if that happens? If that happens, right? If I'm right on my thesis there. What does Bank of Canada do? Do they react? Are they slow to react? Because we've heard hawkishness from Bank of Canada. We've heard Bank of Canada kind of pull back a little bit and say that we're not cutting rates anytime soon. And we've heard Bank of Canada actually sound a little bit more hawkish than the Fed. So that's quite interesting. So, do we see a policy mistake, a policy error from the Bank of Canada? Is there a scenario where the Fed cuts first, but, Canada doesn't? Bank of Canada doesn't? It will be pretty bad if that happens, especially, if it ends up making things worse off. So, anyways, overall, CPI, Canadian inflation report, what do I have to say about it? I have to say that does not convince me enough that the rate cuts are coming sooner, does not convince me that Bank of Canada is going to change the narrative. We see that even though there's disinflation, there's areas that are very important to a human being, food, water, shelter, etc., like I just went over. They're still elevated. And shelter, which is very important, which is a very big theme in Canada as well. A lot of complaints there in the real estate sector, that continues to be elevated. And that's a very big component of a consumer's spending is the shelter, is the rent, is their mortgage costs and whatnot, right? Leaving less room to buy maybe food. Maybe that's where the money is going also. The more to your rent, to the shelter, less to food. So, anyways, let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified on the next video, and I'll see you guys around. Cheers. Bye.